Hello and welcome to another Small Gold live stream. It is September 10th, 2019. And today's topic is how big or how small is the silver market. We often talk on this channel about the small monetary component that silver has compared to its industrial demand component. And we mentioned that investment demand component, while it is small compared to the overall demand of silver, it is significant. And the reason it's significant is that if there is any significant attention paid towards that investment component, there really isn't a lot of silver to go around for that purpose. Gold has always been, and has been even when the United States took the global financial system off the gold standard, a monetary asset. And it's been one where there's been always demand for jewelry. The silver demand, however, even with industry, has ebbed and flowed. It used to be that photography took up a lot of silver demand. Pretty much doesn't take up much at all right now. However, there's been increases in the past 3 or 4 decades in electronics and solar panels and other uses, while the investment demand has also ebbed and flowed, peaking in 2015 with about 275 million ounces going into India, and globally the sovereign mints over 200 million ounces sold in coins. And those numbers have been brought down, at least the sovereign mint numbers and the investment demand numbers have come down 40 to 60%, while Indian silver demand remains strong. But Indian silver demand, as we've mentioned last night, most recently, is largely based on jewelry and, big surprise, silverware, not so much investment demand. So, when gold catches that proverbial bid that I've been talking about for so long, then at some point, silver's dormant monetary component of demand gets lit, and that's sometimes when silver gets driven higher in a parabolic fashion, like it did in 2011 when gold was racing towards $1,900, and in 1979, 1980 when silver hit $50 and gold was headed towards $800. So let's just take a look at how small the silver market is. Now, when I show you these numbers, they're not the investment component of silver available. This is the overall amount of silver available. And as we mentioned, 60 to 70% of silver demand is for industry, and only about 10 to 15% of demand is currently allocated, not by the market, it's allocated by the market towards investment demand. So any increase investment demand, by definition, is going to cut into the pie of the other demand, and that's when you can get a real price increase. So let's just quickly look at the research that I put together. I updated this. I had done this, I think, in 2016. I compared the size of the silver market to the size of JP Morgan's fines over the last 15, 20 years. And then I compared it to Bill Gates' net worth, and we saw in those charts back in 2015, 2016, that silver was tiny, and that Bill Gates, his net worth was greater than the amount of available silver. Not that he has that. He might have it in cash. He might be able to write a check for it. But this updated data will show you, will show you really how small the silver market is, and why, if it gets any, any significant attention from investors, why it could, quote, skyrocket. Now, generally, when that happens, it happens because gold is going bonkers. And right now, we're seeing a pullback. We're seeing a pullback in the gold market. And obviously, when the gold market goes down, you see a pullback in the silver market. So gold right now is struggling to hold on to $1,500, and silver struggling to hold on to $18. But again, if I think that if gold were to continue to go higher, get to $1,600, $1,700, due to everything that's happening right now, most specifically the negative interest rate phenomena, where about 30% of global bonds are paying a negative yield, plus the Chinese-U.S. trade war and just the overall debt situation, you could see where gold would make a lot of sense to a lot of investors as a store of value, a store of wealth, and that silver, its dormant investment component, could also be viewed as being an alternative to gold. So let's take a look at the numbers that I pulled together here. All right, so the annual silver mining production, according to the Silver Institute, these are pulled from the Silver Institute's annual publication, the 2019 report, and it's been pretty steady in the 800 million ounces a year. They're saying it's 855 million ounces. Okay. Well, at current prices at $17.92, what it was this morning, it's above 18 right now, but that's about $15.3 billion. We talk about on this channel a lot the ETFs, what's in the ETFs, and there's about 828 million ounces in all of the funds, the ETFs, SLV, IAU, Sprott, Central Fund of Canada. I even included Gold Money and Bullion Vault and Deutsche Bank's ETF. And you get that 828 million ounces, and that's worth about $14.8 billion. Then, if you go into the COMEX warehouses, as you follow this channel, we do look at the COMEX warehouses. There's about 153 million ounces in the JP Morgan vault. And there's a total of about 312 million ounces in all the other, if you add up JP Morgan's and the other vaults, including Coins and Things, C&T, Nova Scotia Bank, and the other large one is Brinks. And there you get 312 million ounces, and that's worth $5.6 billion. Now that's pretty much all the large chunks of available silver that you might be able to get your hands on. If you want more information on annual mining, we've shown charts, and I could probably add them to the blog post on where the top silver mining countries are coming from. We'll have the ETF chart on the Smaulgld blog post and also a breakdown of the COMEX warehouses. But if you can get your hands on all that silver, and that's a big if, I mean, you'd have to buy all the ETFs, you'd have to clear out the COMEX warehouses, and you'd have to buy up all the available mining supplies. Not the mines themselves, but their forward production for a year. Now, assuming you could do that without impacting the price, which is a ridiculous assumption, because if someone was on the hunt for all that, no pun intended, as the Hunt brothers once did, well, then the price would, quote, skyrocket. But you could have a variation on that where people, groups of investors, are looking to purchase more silver, and where are they going to go? Well, probably after they can buy into ETFs. They're not going to buy from the existing ETFs. They might take delivery on COMEX warehouses, and they might also buy up some of the mining supply. That's not how it would work, but you get the idea that there's $36 billion worth of readily available, or readily identifiable, not necessarily available, silver to buy. What's $36 billion before we compare it to bank fines and the wealth of the top dozen or two wealthiest individuals? I mean, QE was $200 billion a month. That's just the United States. When you look at the debt of China, the debt of ECB, they've done $5 trillion in QE. As I mentioned, $200 billion was just a month's worth of QE for the Fed. So $35 billion, it's a lot of money for us to have, but it's not really a lot of money, as I always say, in the grand scheme of things. Now let's look at bank fines. Now these are fines paid by, there's a list, and I'll leave a link on the Smaulgld website, a website called Violation Tracker, and it lists the top companies that have earned the distinction of paying the most fines. And Bank of America, since 2000, has paid $58.7 billion in fines. That's nothing to them. Think about it. That's a fine. That's like you getting a parking ticket. JP Morgan, $30 billion. These are rough estimates, too. Citigroup, $17.3 billion. I think Wells Fargo is like at $14 billion. These banks pay out fine like they're paying parking tickets. And just those three, $106 billion dished out in the form of fines. So it's nearly 3 times the amount of the value of the available silver. This gives you an idea how someone can make, in fact, what's interesting about this is I was going to say that somebody can make an investment which to them is not significant, but actually to the silver market is significant. James Henry Anderson of SD Bullion has posted on, I think it's on, he actually posted it on Twitter, and I think it's on the SD Bullion website, where there's a long conversation. It's actually on YouTube as well in their channel. And he posted a long conversation of the Q&A session that investors had at the Berkshire Hathaway meeting, where they were asking him, I think it was in 1998, after the Berkshire Hathaway had purchased about 100 plus million ounces worth of silver, and they were discussing it, and Munger was dismissive of it. He was saying it's the small percentage of what we actually own. I'm not really excited about it. And Buffett was explaining how he saw it as an opportunistic buy, but it was a huge buy for the silver market at the time. At the time, silver mining production was only like 553 million. He purchased 100 plus million ounces. So you can see that these large entities have the capacity to get into the silver market in what would be considered a small position for them, but a very large position in terms of the silver market. Remember, this $35 billion worth of value, well, the ETF is investment silver. The COMEX silver is investment silver. But that annual mining silver, that's not really going into fabricating coins and bars as much as it is going to feed solar panels, electronics, silverware, and silver jewelry demand in India, China, and the rest of the world. So there's really not $35 billion worth of silver to buy as investment. There's really the ETF and COMEX warehouse silver that's there as investment above ground. And as many people point out, a lot of silver is just not available to buy. It's either in a secondary supply, i.e. in someone's draw that's not really going to come out, or it's in industrial or electronic waste. But here's where it gets really interesting. We talk about writing a check. Jeff Bezos, the wealthiest individual according to the latest Forbes report, $131 billion net worth. So he can buy up all the silver that's on that chart above if he didn't move the price and he was willing to part with, just $35 billion worth of his wealth. He's going to probably pay more of that to his divorced wife. Bill Gates, $96.5 billion. Warren Buffett, $82 billion. Now, if these people were a consortium, which they're not really, but if they decided to go halvesies or threesies, 1/3 on a little bit of silver, they've got $310 billion for which to do so, and they wouldn't have to buy much to move the market. I'm not saying they're going to, or these three have any interest in it, although Buffett did once purchase silver on behalf of Berkshire Hathaway. But when you go over to the list continues. Mark Zuckerberg, and again, I'm not suggesting these people are going to buy any silver, but Mark Zuckerberg is worth $62 billion according to Forbes. Larry Ellison, $62.5 billion. Michael Bloomberg, $55.5 billion. You get the idea here. Sergey Brin, guy over at Google, $49.8 billion. So these people, these guys, Larry Page, they all have $50.8 billion. They all have net worth in excess of the value of available silver. Let me just show it to you on a chart, and then we'll see if we got any questions or comments. But here it is rolled up on a chart. The value of global silver compared to bank fines and just the top three individuals' net worth. So there you see the $35.7 billion in annual silver mining, silver ETFs, and COMEX warehouse silver versus just B of A, JP Morgan, and Citibank fines since 2000, $106.1 billion. And Bezos, Gates, and Buffett, slap them all together, put them in a room, have them show their cards, and if what they're telling Forbes, or what Forbes thinks they have, they got $310 billion, nearly 10 times, or at least 9 times the size of what's available in the annual silver market. All right, let's see what you guys think, and if we've not got much to say today, we'll move on, and we'll see you later tonight. And it looks like we don't have many comments, so we're going to shut it down right now, and we will see you later.